Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you've been a fantastic day and had a wonderful weekend. Taking a good quick look here at Bitcoin, seeing what's going on. We're going to recap on some macro stuff, of course. It's Monday. We did finish a weekly candlestick, and we also want to take a peek at the most recent anticipation. I basically sent this out to my community on Sunday, so just give you a heads up. We're expecting the price action to come up to the cloud, this local point of control at 98,000, and essentially reject from there after retesting the ascending trend line. Now, if you look at the price action right now, it did do that within reason. In other words, it broke above the cloud for about an hour or two, a little fake out, and then pulled back pretty hard. So the truth is, when situations like this occur, you want to make sure to hold to your guns and give the chance for this trend line to hold. In other words, in this example, the Ichimoku cloud is that trend line. There's basically a series of two different trend lines. You want to make sure that that holds and essentially don't get shaken out. Because again, this is a very common occurrence. Bitcoin, pretty much any altcoin, for example, you're going to see breakouts, false breakouts occur, and then the price turn right back around, and you're stuck in a late long at 98K. All right, so don't be a late long here at this point. There's not a lot of confirming factors letting us know we're going to see a breakout. We are starting to see, and I can kind of, we'll talk about this here in a moment, but we do have like a descending, broadening wedge here occurring, which is generally a bullish sign. So folks, we're still in good shape, all right? So this is nothing super crazy and outrageous, but once again, we got to give this a chance to play out. In other words, previous high of 94,700, the price wicked down to there perfectly. Look at this here. Previous high, new low. All right, so hypothetically, 94.8 is the new low, and we should see the price try to recover back up to this 97, 98K range. Again, that's just based on where we're at. But the overall trend for the moment is still down. We got to recognize that too. All right. So again, it's kind of in a funny place right now where we're kind of like in this transition, if you will. And again, when these transitions occur, you want to treat them with respect. You don't just take a bunch of longs because Bitcoin hit your original target. Okay. So be careful with that. All right, let's start off with liquidation. And before we jump into this, I want to say thank you so much again for hitting that like button, commenting below. Absolutely appreciate it. Thank you so much. Let's take a look here, of course. 100,000, as we know previously, has a tremendous amount of liquidation to the upside. 100 to 101,000, that's kind of the heavy accumulation. We look down below, we got a pretty significant late long here. It's a pretty high leverage long at 94,000, and then we got 94.5. Anywhere between 94 to 94.5 could be a retest. So just be mindful of that. The price continues lower. We probably see one more wick down there just to go ahead and destroy that little area. And I know it's like, why does this happen? Why on the back end is this kind of manipulation occurring? Well, it's basically just, it's market makers 101. They see that they have enough money to be able to sell until you get there in order to be able to just reverse it at that point. So do you really think they're happy with 96,000? They're going to be much happier with a $94,000 entry, and then they pump the price back up, right? As soon as they sell until they get to their target where everyone else, or at least majority of opposition, is taking out of the equation, then they can move the price the other way a lot easier, okay? Because nobody's trying to sell anymore. It's a really funky thing, and it's super common in trading. So the sooner you understand that, the better. Again, that's why we cover liquidation data here. Last but not least here, liquidation delta is pretty much plateaued, or more so, sorry, not plateaued, it's zeroed out. So we got just as many shorts as we do longs right now. So we're in this weird, again, it's part of that transition where Bitcoin breaks a range, trying to define if it's going to continue lower or higher. And at this point, this isn't very telling. Okay, that doesn't tell us much. What this does tell us here, open interest, however, is that there's a lot of people long at 97.5 and 98K. And we can tell pretty obvious they're underwater right now. You could be one of those right now. And that's okay if you are. I understand it. It's natural to want to try to buy what you feel is the last dip before the price takes off. And I do personally still feel like we're going to see 100,000. I mean, I think that's almost an inevitability. But at this moment here, the smaller time frames are kind of indicating otherwise. Let's take a look at the daily, let's start with the weekly first, and then we'll work our way down, and just kind of recognize a couple of things here first. The weekly and the daily, they're still going to be very bullish. Even though we're pulling back, we've pulled back about 4K roughly in the last 2 or 3 trading days. That amount is very negligible compared to the overall sentiment here. But if we look at the overall, this is the weekly again, we can see a stochastic divergence here, kind of letting us know that the price does want to pull back. It's pretty much overextended. There's no other way around it, and a correction would make sense. Now, I don't think it's going to be monumental, but we do take a look at TD sequential here on the weekly. This is concerning, right? We got 9 weeks in a row with very little consolidation. We had a 2-week period here at about 70,000, if you remember that, where the price action kind of went sideways, but now we're overextended, okay? And that overextension concurrent with stochastic RSI does imply we probably see the price pull back a bit further. Again, there's a lot of profit to be taken too, folks. So let's just not get too ahead of ourselves and think that we're just going to the moon, right? This is just the realism of it here. It's not a guarantee, but these are just things that we can see in the charts, kind of letting us know that a reversal could happen. Keep in mind, we're still over 70 on the RSI, and that kind of negates the rest of the stuff here, because stochastic RSI is kind of it's an early breakout, an early transition type of indicator, right? So with it being, diverging for the first time here, I'm not super concerned with it, but it is still a reality that we're overextended and we've been moving for 9 weeks straight without correction, okay? So kind of a lot of movement, right? So having said all that, that's kind of where we're at there on the weekly time frame. Mostly bullish. It's still going to be awesome. And we look at our moving averages, we're above all four. There's nothing really truly bearish here except for overextension and a potential shift in momentum, okay? And that shift in momentum can come in a lot of different ways. It doesn't have to drop to 50,000 to see it. It can absolutely slowly bleed out and the price goes sideways for a little while. We actually might be in a situation where we're going to, perform into this, descending, broadening wedge pattern and inevitably break out after a couple of days or weeks. That's pretty common. Just know we're coming up on a holiday week here soon, another few days, and we got Thanksgiving, at least here in the U.S. or wherever else it's celebrated. And I can tell you that, that could be disadvantageous in a lot of ways. We have seen pretty significant pullbacks in previous timeframes. Although, there's also been pretty monumental pushes too. I remember we pretty much were in altcoin season in November of 21. I recall I was covering that in what coins like Crowcoin and Terra Classic or Lunk. Those coins were just going off the charts, right? Again, that's a different world back then, but the truth is using history to define the future can be helpful, but you also want to be careful going too hard with it. Anyways, that's where smaller time frames do help us with just kind of identifying patterns and transitions. So let's look at the daily time frame first and just kind of clarify. Still, again, pretty good shape. We are seeing our second stochastic swing to the downside. That's what cued us to take our short position with Bitcoin. So if you're not familiar, we did short Bitcoin. We took two profit targets from 98,000, 97.9 to 94.8. Okay. So we hit those targets there. Again, I'm showing that to you because if you caught my analysis on Saturday, you'll know that I was moderately bearish on Bitcoin, and that stochastic divergence, the second stochastic divergence on the RSI on the 4 hour, the daily time frame was part of that indication, that early onset, if you will. And we can see here as well, RSI is still over 70, so truth is still moderately bullish in the overall sense there. Okay, so that you got to recognize that you can still be pretty bullish and still, like the chart can still appear bullish when it's really not. Okay, that's kind of where we're at right now. Again, it's short-term bearish, but I would say macro bullish. That's pretty much the easy way to describe it. MACD is on the horizon of diverging here too, so we could see an MACD FU or a continuation. A lot of things can happen, but I think the truth is, as time progresses here, the more time we spend in this range, the more likely we are to diverge. But again, as soon as you commit to a short position, what do the market makers do? They're going to pump the price action back up. They're going to destroy your account. Okay, and then what they do is they do that, because it benefits them mostly, but it also hits the old reset button and gets people confused, and it's easy money for them. Meanwhile, people like you and I are trying to scratch our head like, what the hell just happened, right? The trick is to not have to worry about that, and using low leverage, I would say, is probably the best starting point to do that. And I know you probably hear me say this a million times, and I'm a broken record by now. But there's so many new traders that come over to my community and or watch my videos that it's important you need to recognize that, this is like a call to action. Low leverage, folks. If everyone used low leverage, market makers wouldn't have a leg to stand on, right? They would have a lot less manipulation options because people would be trading responsibly. It's the unfortunate circumstance that everyone seems to think that cryptocurrency is a get-rich-quick scheme and that, everything goes to the freaking moon. It is so stupid. It is insane. I struggle with it daily. I think if I ever lose sleep, it's because of that versus, actually having to close a trade in a stop loss or triggering a stop loss. Whatever. Anyways, I have a different mindset, and I just want to make sure that you are always being the best trader you can. So let's take a look here. 4 hour time frame, we're under 50 on the RSI. That is generally construed as bearish. Stochastic RSI is diverging. Traditional money flow index, or just MFI rather, is hanging out right there, closer to 30. So we're not overextended to the downside yet. I think we still have further downside potential. What we're looking for is for these indicators to continue lower. Maybe we get a 30 RSI and a 20 MFI, and we consider buying that dip. Okay, now I don't normally like to buy a dip just to do one, but if we get into this range of 94 to, I'm spitballing, 93.4 to 94.7, 94.8, right in that range there, just say 95,000 as an estimate, that may be a good consideration for a long, because we'll be moderately overextended by then, and people will feel like it's a good value to get in. And that's pretty much our target. In general, my target has been to try to get in between 93 and 95, okay? Again, I'm not just going to blindly jump into that trade right now. I want to reevaluate later when that gets there, but the truth is we should be in a better position by the time we get there if that happens. Hourly time frame, let's go ahead and talk about the Ichimoku cloud and call it a day here, and just recognize that we're still below the cloud, and then we got a little false breakout here. And I want to talk about this too, because some community members were asking me earlier, like, hey, I know you mentioned in the Discord chat to wait for the cloud to be retested and to not consider short until then. And then what happened is some folks actually ended up taking a long here because it broke above the cloud. And the truth is, and I teach this in my trading university and also my public Ichimoku Cloud instructional video, to always wait for at least 3 to 4 hours above that level for confirmation. So say, for example, the price action would have went like sideways right here. Even if the price would have pulled back, that still would have been a much better confirming factor to take a long position, because two things would have happened. The lagging span would have been free and clear of the price action, and the cloud would have been below the price action. So hypothetically, it could have bounced from there. Now again, this would have happened regardless, right? Regardless of the cloud. But the truth is, you probably wouldn't have taken a late long had you used that confirming factor, right? And to me, a confirming factor for the cloud is to make sure that it closes above it and stays above it, right? This didn't close above it or stay above it. I mean, it did close for an hour, but an hour later it was below. Anyways, those are just little confirming factors that I use. It's not an exact science. It just increases your odds of success. So that's just kind of explaining that if you were kind of unfamiliar or not sure how that works. It's just a conservative indicator that really helps you get more confirming factors to ensure that you're on the right side of the tracks when you take a trade. Because almost everything was glaringly obvious. It's like, hey, the price is gonna break out from here. It seemed pretty likely. But again, we had that point of control. We had a lot of reasons why it was a false breakout. And you wait for false breakouts to break out before taking one. That's why I always talk about false breakouts, or more importantly, breakout traders not being successful. They're rarely successful. When they are, they're going to probably post it on social media. You'll see all about it. But the truth is, when you wait for the price to actually break out, you trade with confirmation. You're going to have less profits, but you're going to have more consistent profits. That's just the way around it, or there's no other way around it. That's how it's described. So me personally, I'd much rather wait for consistent profits that are going to hit their targets, even though albeit lower profit ability, versus being, super awesome machismo. I've got 100x return because I bought a breakout, and they're not sharing with you the 50 other trades that went wrong. So it was just some friendly advice. It's nothing's perfect. I am far from perfect too, but we've been taking some darn good trades here lately, and the market's been giving us a lot of junk, a lot of crap. So the truth is, less is more. Let's just put it that way. All right. That's all I got here, folks. I appreciate you watching. Make sure you join us over at Bitunix, Phenomenal Exchange, link down below for these guys. 60K prize pool, make sure you're taking advantage of that. Top 20 traders will benefit. Then, of course, I'll post our playout chart here on our Twitter, Telegram, and Discord here shortly. Give you perspective on my thoughts here on Bitcoin. I hope you have a good rest of your day, though. Be safe out there. We'll look forward to the next one. Take care of yourself. Bye-bye.